Good morning, everybody, and a warm welcome from MWB Research. We appreciate you joining our high-tech engineering conference today. You will have the opportunity to digitally meet 14 different companies from this space in individual 30-minute sessions. Each company will explain its business model and current developments. And of course, you will have the opportunity to ask questions. For that, please use the chat box on the lower right-hand corner. We'll kick it off today with Basler AG, a leading manufacturer of image processing components, and the company will be presented by Hadi Mehr, its longstanding CFO. Hadi, good morning. Over to you.
Thank you very much, and good morning, everyone. Happy to present you today briefly the business model of the company, also the recent development, financial development, and also our outlook, before we then have time for a 10 minutes Q&A session. Let's directly dig into the topic and briefly introduce the company and its business model. So Basler is a leading manufacturer of digital vision components. I come to this later. Just a brief overview of the company itself. We are approximately 850 employees. We call ourselves a public listed family business because our founder, Norbert Basler, is with his family together the majority shareholder of the company. We are the world leading brand for industrial cameras in the market for approximately 35 years. And I will tell you more about the products in a minute. With regard to our business, it's highly international. When we look at the sales distribution in the lower part of the slide here, for the first half year, 23% of our sales was realized in Americas, 30% in EMEA, and 47% in Asia. So we are selling highly international. We have, from a footprint perspective, various different sales and marketing subsidiaries around the world. All where you see the dots are direct representative or subsidiaries. And we have two production sites. The lead factory is in Ahrensburg, close to Hamburg in the northern part of Germany. And the other factory that we have where we produce our products is in Singapore, where we produce a subset of our products for the Asian markets. With regard to the team, I told you already, roughly 830 employees. Relatively classic distribution for a high-tech business company. 37% of our employees work in sales and marketing, 24% in operations, 15% in admin, and 24% in R&D. So relatively high R&D employees or number of employees in R&D. We spend approximately 13% of sales in R&D in order to develop, and this brings me to the next slide here, in order to develop vision components that our clients need to build vision systems. And if you want to build a vision system, you need illumination, you need lenses to capture the scenery, you need cameras, obviously, you need also acquisition cards to capture the images, process images, also you need processing units, and you need software and cables. From a business model perspective, we develop standard components, but we also customize for certain clients when the business model is attractive. 80% of our sales is based on standard products. 20% of our sales is on custom products. So we are active in different vertical markets or vertical market clusters, always through our clients, because again, we are a component company. We are selling to our clients components, but our clients realize a system and act in a vertical market. Most of our clients on the upper left, most of our clients are acting in the factory automation domain. So here we have clients that typically develop and sell production machines, or let's say process optimization units. We also sell to clients in the medical life sciences, for example, in ophthalmology or in slide scanners for life sciences applications or laboratory automation. We have also intelligent transportation business, mostly tolling, red light enforcement, speed enforcement clients. We act in the logistics, especially in warehouse logistics, online logistics, and some new kids on the block are retail or agriculture, where we see that clients start to, for example, in retail, to automate a retail store, a brick and mortar retail store, in order to compete against onliners, and also in order to automate a shop and in order to have less need of personnel. And last but not least, also in agriculture, here we see also a trend that grains are processed on the harvesting machine already, autonomous harvesting, driving harvesting machines, and other applications. From a revenue distribution perspective, the vast majority, roughly 70%, is still in the area of factory automation, 10% roughly medical life science, 7 to 10% in intelligent transportation, logistics roughly 10 to 12%, and retail and agriculture are small and new kids on the block with below 1%. The market itself, we call this the vision universe, because we sell technology at the end of the day, and we see that vision is making inroads into new applications day by day. And this is also why we believe that the market will continue to grow at a pace at around 7% per year. It's a bit cyclical, but we definitely see this market continues to grow. To understand, let's say, our business model, it's really important to keep in mind that we play on a component level and how the business model works. So when you describe our markets from a value chain perspective and not from a vertical market perspective, there are three layers. There is the component layer on top, so generic components for vision technology, sold to the second layer, which are typically OEMs, so machine builders and system integrators. And these companies translate generic technology into a vertical specific application or machine device and sell it to the end user. This can be a production house, this can be a hospital, this can be an infrastructure, for example, when we talk about traffic. It can be a warehouse, as mentioned earlier. We address, or we have approximately 5,000 to 6,000 customers in the second layer. So it's a very fragmented world that we address. And when we address multiple or a couple of hundreds applications in many, many different vertical markets. So we are in a transition as a company. We originally, for the last 20 years, come from being a very strong player in a single component camera in the factory automation, so the lower left part of this graph here. And step by step, we develop ourselves to a full line provider, addressing the full computer vision market. So we diversify into different components, from single components to multi-components, to increase the share of wallet from our clients. On the one hand, on the other hand, another growth driver is we address clients in different verticals, and especially we search for verticals growing over proportional. And with those two directions or growth drivers, we continuously outperform the market. And our goal is here to outperform the market by and large 2x. So the market is growing with 7% CAGR, and we want to grow in the range of 14% long term. When you look at our growth trajectory in the past, you can see that we had pretty long stable growth. It was cyclical over the years as we address typically CapEx markets. So when CapEx markets are strong, especially in the semicon and electronics, where we have quite a larger exposure to, we had also strong years. And in the recent past, we went through two difficult years in 23, 24, because we have had quite significant growth in the Corona years due to a change in consumption. So consumers spend more money for goods, especially consumer electronics goods. Also, companies digitized. So the CapEx investments for semicon electronics was high, and with that also our business was strong. We also had quite some business in laboratory automation due to Corona tests, as you can imagine. And last but not least, many orders were processed online from consumers in the lockdown periods, and also companies like Amazon and other onliners invested heavily in process automation. So this gave us quite a ride in 21, 22, and we got unfortunately a backslash in 23, 24. We unfortunately had misjudged the market development in 22, 23, and we hired quite a lot of people, and we went through quite significant cut. Good news is we are, since beginning of this year, the markets started to recover slowly, but there is recovery. We adjusted our cost base, and we expect this year to grow again. So the current guidance is 202 to 215 million for this year. Yeah, you can see this here also, just a brief look on the numbers. So we had quite strong years, as mentioned, in 22, quite a strong year also in 21, and then the dip in 23, 24, and significant losses due to restructuring and right-sizing the organization. This is over now, but it's definitely worth to mention and also give you an outlook here. So if we look at the recent developments, especially bookings and billings from a quarter perspective, you can see here the last 6 quarters. So we had, since I would say Q3 last year, step by step, it's fluctuating a bit, but step by step, order entries are growing again. With that, a little later, as our lead times are very short, typically a couple of weeks, so the billings kick in, and we have had a good start into the year with billings at around 60 million, followed then in the second quarter by 52 million. But in the second quarter, also high bookings with 61 million. That gave us a good start into the third quarter. And so far, even though the macroeconomy is still not strong, we see also in the third quarter a reasonable development of the company. Yeah, first half here in this grid combined. So we had order entry 22% up in a market environment that is most likely somewhere up 5%, 7%, 8%. So we are clearly outperforming the market. Also sales 20% up and back in the black, as you can see, earnings before tax 8 million roughly, whereas in this first half year last year we were at minus 2.3. Yeah, how do we see the outlook? So for the second half of the year, we expect that the macroeconomy will still be making more kind of a side move on a low level. The best indicator you could look at to follow our market environment are the industrial KPIs in the advanced countries for capex goods. We expect that in most of the countries they will stay at around 50%. We obviously see that the trade and geopolitical conflicts will continue in the second half to mute the investment climate. Unfortunately, we are facing quite some headwinds from foreign currencies, especially US dollar, Korean won, Chinese yen, Japanese yen, and Chinese yuan, Japanese yen, and against the euro. So this costs us some margin at the moment. We assume this continues in the second half of the year. Yeah, competition intensity most likely will be further high and rise further, especially from competition from China. We see larger project opportunities for logistics and semicon AI-related applications in the US and China to continue in the second half of the year. It was already strong. This part of the business was already strong in the first half of the year. And we have at the moment, and this is relatively natural for our business, low visibility and predictability because our typical lead times are 2 to 3 weeks. So we normally have only two business worth of 2 months in our books. So this gives us a low visibility into the remainder of the year. However, what we recently did due to the strong start into the year, also due to the strong continuing in this beginning of Q3, we raised our guidance from formerly 186 to 198 million to 202 to 15 million, 215 million. And also the earnings margin we raised from 0 to 5% up to 2 to 6%. So we have quite a good momentum. With regard to the earnings margin or pre-tax margin here, it's not where we want to be, but we see ourselves here in a transitional year as a stepstone towards our longer-term goal, which is to bring the company back after 2 difficult years to a compound annual growth rate of by and large 15%, with a sound earnings or pre-tax earnings margin of 12%. And by 2028, we want to have realized at least 275 million top line and also a reasonable cash flow or free cash flow with a cash conversion rate of 70%. This brings me to the end of the presentation in order to have 10 minutes left for Q&A.
Indeed, on the spot, despite my introduction, 19 minutes, very well. We do have a few questions that I want to dive right into. There were 2 questions regarding the competitive situation, especially regarding the Asian competitors, because on the one hand, you said that competition is going to rise from China and from Asia. On the other hand, you said that there were huge project opportunities in China and in the US in logistics and AI. Can you put this together and maybe also talk about what the Asian competition developed like over the last 2 to 3 years? And then I have one more follow-up to that.
Yeah, definitely. So the situation is that approximately 8 to 10 years ago, larger Chinese manufacturers entered our market. Beforehand, we were always competing against Asian competitors. However, they were not as strong at the end of the day as the Chinese competitors. And what we are seeing is that the Chinese competitors are, let's say, mainly acting and strong are in China itself. They go also direct. So we see the direct aggressiveness in China. And we see also a big spillover or entry for a couple of years already in the Asia Pacific region, where they mostly act through distributors, which make them a little bit less aggressive because there is a middleman in between. With regard to the US, we don't see Chinese competition. And with regard to Europe, it's somewhere in the middle. We see them acting, however, much less than in the Asia Pacific region. Nevertheless, I mean, I presented in the beginning, roughly 50% of our business is in Asia. This means for us, we need to compete and be, let's say, with innovation. We also need to compete, and I explained this, with, let's say, moving from a single component manufacturer to a full line provider or subsystem provider that gives us much more room to differentiate, combining different components to a subsystem. And this is the way we are going. This is also the way we see we can have even success in China after 2 also difficult years in China and still in a weak environment in China. We are able to grow again this year. And this means there are clients out that are willing to pay a premium. Not everyone, but they are willing to pay. Some of them are willing to pay a premium. We concentrate on those clients, and we need to outperform by innovation.
Great, thank you. There were some questions regarding your Pylon suite. Software integration. Can you talk a little bit more about that? What you see the perspectives are for that, growth opportunities?
Yeah, that is a good question. Pylon actually, as a framework software that enables our clients to connect all our hardware products and to integrate the hardware products into a device or into a machine, is for years now becoming the key differentiator of our products. We invested in Pylon over 20 years, and it's an accumulating development, and we are clearly outperforming or differentiating against our competitors here. And we will continue this. We are on top of the framework software. We added also vision tools, so application software, classic algorithms, but also AI functionality recently, about a year, 2 years ago. This is still early stage, but this also completes our full line provider approach, not only offering hardware, but also offering pre-processing and processing software elements. This definitely is a long route to bring this to our clients, as we need to go through these design-in phases, but we foresee definitely Pylon remaining a key differentiator and also a key element we invest in. The challenging part of Pylon is that we are not able at the moment to charge independently. So the business model is in a way that we charge for the hardware and the software comes for free so far. Looking for different models, but also this needs, let's say, will take some time to re-educate the client, because at the moment the client is not willing to pay for the software.
So currently this is more an add-on to place the product with clients, and it's not margin accretive, but rather slightly margin dilutive, whereas it could be potentially margin accretive or a stabilizing agent for margin going forward.
Exactly. It's from a software perspective, it's a little bit like when you look at a smartphone, for example. I mean, you pay for the hardware, but the software is a super high integral part of it, and a key differentiator. And we are facing the same issue at the moment. I mean, we introduced application software in order to step by step also earn money with the software, but that's really on a small basis at the moment. And also for investors who are typically more short-term oriented, it's nothing where we will see substantial revenue and margin changes in the next 2 years. So it definitely takes time.
Looking at time and the future, there was one question that certainly is looking forward quite a few years, and it reads the opportunities in the field of humanoid robots, if that is something that might become relevant at some point for you, and to what extent.
Yeah, I mean, robotics and especially also humanoid robots, I mean, that's definitely a very interesting trend. We are also investing from a technology perspective a lot into 3D 3D imaging, which are typically used for robots to orient themselves or grab something. I mean, at the moment, we see again quite a hype in the newspapers. I mean, I'm in the business more than 20 years. I've seen over time that robotic hype is presented and then it's vanishing again. But in general, we see definitely a trend and an opportunity for us that the robotic markets will grow. Be it standard industrial robots or humanoid robots. And with that, also vision is being needed. And as we, sell vision components, we also enable robotic makers or robot makers to let their robots see. So that's definitely an opportunity for us. But my assumption is it will take some time because it's at the moment it's kind of hype topic, but there are quite some technical challenges to master in order to grow the market itself.
Great. I have 2 more questions and 2 minutes. One of them is, and you've already talked about growing in new areas like retail and agriculture. The question is regarding cyclicality and what you plan to reduce cyclicality, especially with regards to the semiconductor and electronic sectors.
Yeah. So the reasons for cyclicality is twofold from our perspective. The one is the regional exposure to Asia, and the other one is exactly semicon electronics. What we are doing is that we look into, let's say, distributing over time our investments wisely and do the capital allocation in a way that we grow, as mentioned earlier in the presentation, also non-factory applications like medical, like logistics, in order to rebalance or balance out a bit the factory automation and especially the semicon electronics. Does it mean we don't sell into semicon electronics? No, because that's definitely one of the biggest verticals, it's not one vertical, but cluster of verticals where you need camera technology. And we see also a bright future in semicon, especially as we see technology progressing, and then there will be even more need for vision in manufacturing for semicon and electronics.
Great, thank you. To all the participants, the next meeting that will follow right now is Contron. I just posted the link in the chat box in case you want to move over and join. And my last question for you, Hardy, would be, you mentioned you cut break even down to 180 million. You're now looking at medium term 275 million. when do you need CapEx again or OpEx to fulfill that revenue?
Yeah. So from a CapEx perspective, we are typically having a run rate of 2.5% from sales, so 3% per year. I foresee this also for the coming years, so no big step or something. Our capacity is good enough for 275. And from an OpEx perspective, until the company is at around 250 million, we don't foresee the necessity to significantly or increase the personnel. Going beyond 250, then we need to start to add personnel.
Okay, great. Hardy, thanks so much for the insights, great answers to the questions, and of course, thanks to you all for participating and posing those great questions. I wish you a great morning and great afternoon, Hardy, and to all of you who are moving on to the next meeting, enjoy. Thank you very much.
Thank you very much, and have a good day today here with all the presentations. Thank you very much.